have you ever thought of what life would be like without mobile telephony or telco-enabled services such as fintech, telemedicine, and even broadband? Well, the impacts of naira devaluation, high inflation are having far-reaching consequences across key sectors, including telecoms. In late April, the Association of Licensed Telecom Operators of Nigeria, ALTON, and the Association of Telecommunication Companies of Nigeria argued that the current tariffs were insufficient to maintain their business operations given prevailing economic conditions. The industry associations also argue that for more than a decade, the pricing regime has not been revised. When juxtaposed against the growth in tele-density from 1.89% more than 20 years ago to 103% today, and the growth in the numbers of base stations over the same period, do they have a point? Already, some operators unable to pass on the higher cost to consumers are looking at commercial adjustments to their service contracts to weather the storm. Well, today, I'm joined by renowned economist Bismarck Rewane, the Managing Director of Financial Derivatives Company Limited, to help us press the reset button on the telco industry. Great to have you on the show today, Mr. Rewane.
Good morning, thanks.
So I guess my first question is, from an economic perspective, can we even understand the contribution of this industry to Nigeria's economic outlook as the basic foundation for the arguments of hike or no hike?
Okay. Theoretically, right, telco sector contributes 10% to GDP.
Okay.
All right. And therefore, it assumed that if you shut down the telco sector, Nigeria's economy would only be affected by 10% and 90% of it will continue to roll. But the reality is that that ignores the linkages between that sector and others. One, because that sector provides inputs, basically critical social inputs, infrastructure inputs into many other sectors. Two, there's the unbalanced growth theory, which says that if a sector is growing, it pulls along others, right? And so if that sector's growth is higher than the GDP growth rate, it takes all the others along. And if it's there can also be the negative effect. If it's declining, it drags it down. So you have the positive multiplier and negative multiplier. But the thing is just that, can you imagine, and you said it at the opening, can you imagine that if the telcos all shut down their system today, what will happen? You know, if you play any social event, where the government, the ministers, the governors are sitting down, all of them are fiddling with their devices because they are sending messages they want to be on. And that is the first indication of the fact that this device and the infrastructure behind it has become so critical that you can't imagine that you didn't have a phone 20 years ago.
And in fact, we saw a glimpse of it with the challenges with the undersea cables that then impacted ICT across Africa.
Across Africa, and you can imagine.
Yes, yes.
So it became a crisis. Now, the thing is that let us take it political, economic, and social. Now, with the beavers and all of that, can you imagine what would happen, or what would have happened if the telco sector broke down in the midst of that election, or the next election coming? It could lead to political chaos and a political crisis. Socially, you can imagine streaming games and all of that. Then economically, like I said, all the airlines, the control towers, the booking system, the payment system with trillions of naira being settled every day. You have also the what we call it, the petroleum sector. So you have payment system, you have telemedicine, you have tele-education, and all of these things. So it is so critical to the survival and growth of the economy. So we cannot measure it just because of its contribution.
But the ancillary value chain,
What is very interesting is that the dividends and taxes paid by the quoted telcos only comes to almost 16% of the corporate income tax of Nigeria.
16%.
And you find that if you take their corporate income tax and dividends paid in 1 year, it's an equivalent of almost 3 months of the FAC allocation.
Wow.
Which means that if it continues now, because MTN, for example, had been declaring dividend for the past 18 years, and then all of a sudden, zero, right? If this continues into to the end of this year, it means that the amount available for sharing amongst the consolidated revenue fund for states, federal, and local governments is going to drop sharply.
You've painted a very strong picture of how the sector contributes to GDP and the broader economy. Yeah. So the question then becomes, if it's so strategic, why does it have this structure where for more than a decade, tariffs have then remained pretty low? Right?
No, because they came in, the entry pricing was above equilibrium. There was no question about that.
Okay.
Because that was, essentially, when you start a business, you produce where your marginal revenue equals your marginal cost.
Yes.
The average revenue per user at that time was $50, and then $50, and then you had your cost. So we had that. But over time, they had amortized all of that fixed asset investment.
Absolutely.
Now it got to time to reinvest. And then that is what has come in.
Economics weren't making sense.
Absolutely. So 11 years ago, you had the price of diesel at 190 naira per liter. You had the exchange rate at 175 naira to $1. You had a minimum wage at 18,000 per man. And inflation was about 8%. Now, fast forward 11 years after, the exchange rate is now 1,300. The diesel price is 1,200. The minimum wage, we're talking about 615,000. How on earth are these guys going to ever even break even, not to talk of invest in improving service and the quality? And what more, the quality of service, when it suffers, productivity suffers. Productivity suffers, output suffers. And that is a recipe for high inflation, a weak currency, and a cost of living crisis.
So let me play a bit of devil's advocate.
Yeah.
You know, on a good day, on a good normal day, you're using your mobile network in Nigeria. The number of times you have to say hello, the line cuts off. So the average consumer on the street, when you layer on the consumer finance challenges, credit crunch, high inflation, high exchange rate, high interest rates, and then now revision of electricity tariffs, at least for some bands of consumers. Now you layer on an increase in telecom tariffs. I guess the average Nigerian may ask, what about service quality? So are you then saying the reason for the poor service quality is because the economics of operating in that industry have not been market friendly or investor friendly?
Let me say it this way. The fundamentals of this industry have become unattractive. Because they're unattractive, the returns on investment do not justify new investment. The lack of new investment means that the quality of service is beginning to fall. Why? Because this new technology is very power intensive, power consuming. It needs, because of the new devices, and you find that what the physical infrastructure of power, the physical infrastructure of all other items in the economy is undermining the ability of the operators to provide that service. And even if they are invested, the knock-on effect of underinvestment in other sectors is beginning to affect it. Yes. So, if you, for example, if you do not invest in oil and oil revenues drop, that means the amount of dollars available to support the exchange rate suffers.
Absolutely.
And when that exchange rate suffers, then the cost of even providing this service by the telcos suffers. So it's how would I put it? There's a private sector and there's a public sector. The public sector is emphasizing revenue, while the private sector is emphasizing income and return on investment. The private sector worries about growth. The public sector is looking about how they can balance their budget or fund their deficit. Now, the policy reforms that have taken place so far have been addressing revenues, ensure that you take money from the people, give it to the government. The fact that the government is not using it efficiently and optimally cannot be a reason why the private sector cannot price their commodities and services at a break-even point. So many times people kind of confuse the cost of poor governance, which the people are suffering, and the cost of doing business, which the people are going to have to bear. You can't isolate the two, but you can't make one the reason why the other suffers.
Okay, yeah, I mean, I heard you quite well. So now let's try and maybe look forward a bit. We have the situation now where both industry associations are calling for a review of tariffs. Giving some of the policy pronouncements and stances we've seen over the next year where consumers may have accused policymakers of coming up with draconian measures, not thinking through a phased approach or looking at some of the elements of that. What would the recommendation then be now between the operators and the regulators around this tariff issue?
Let's take a global view of the economy, right from the top. You find that you had a situation where the Nigerian economy, or like many others, are trying to transition from being an imperfect economy where there's state-owned monopolies and oligopolies exploiting the people and investing suboptimally and getting suboptimal output. Now, we're trying to make that transition. One of the key elements of that transition was the either precipitate announcement of the reduction in subsidies and floating of the exchange
You said
rate.
reduction.
Yes, reduction. That's
a whole other story.
So that started it. But it was not sequenced in a way that the money supply saturation, which was a major catalyst for inflation, was left alone. So what happened? You had these two subsidies which were removed, which are reverse taxes. So the people suffered a loss in income. But then, at the same time, the government was also being subsidized by the people because they were buying treasury bills at 2-3%.
Yeah, and funding the government.
Funding the government. So the government really took advantage of the people. Now, after that, 3, 4, 5 months later, finding that this was a difficult situation, the government now went into a tightening mode. That is, central bank tightened up. As they tightened up, the cost of borrowing increased, the corporate mortality increased, and it helped to maybe appreciate the naira marginally, I mean somewhat, or move it in the right direction. But now the unintended consequences of a tight monetary policy environment is that it is leading to layoffs, leading to corporate mortality, and other consequences. Now, so what to do now? Where we are now is we have a tight monetary policy, we have a currency that is struggling to recover, and we have high inflation. So basically you have stagflation. Now, 2 steps. One is to have a fiscal stimulus plan. But a fiscal stimulus plan without reforming the institutions to implement it is a recipe for chaos. So what has to happen is that you have a fiscal stimulus plan which is of the magnitude that can have an impact, maybe 5-4% of GDP. And then you also have simultaneously a reform of the institutions that will carry it. It's not just about making announcements. Those institutional reform, which will actually deliver and implement those policies to make it tangible so that people can feel it, is the second part. And this sounds very abstract, but you cannot do this. So you have the short-term fiscal stimulus plan, you have the long-term plan, and it has to fit into the political electoral cycle.
It does, but how do you fund the fiscal stimulus plan?
Well, that is a big issue. Now, you're funding it through the markets, right? And you're raising interest rates.
So you're funding through the markets by issuing more treasury bills?
Yes, but then if you are doing that, you're taking
liquidity out of the market.
Right, but the money that comes in, is once you increase savings, you increase investment. But the major thing is that we need some new money, not just naira money, because that's printed money.
FX.
Dollars. So are you going to have a new Eurobond issue? Definitely you need to do that. Are you going to we have some money from the World Bank, $2 billion. That's nothing. That's a drop in the bucket. Are you going to go and have what they issue domestic, the diaspora fund, which is $10 billion? Yes. Will Nigerians part with their dollars at what rate of interest? Right? So there's a debt service cost, right, which you need to do, all right? So if these things are not done, and we begin to pick telecoms here, power here, this there, you are just pricing in a very haphazard manner.
So what you're advocating a more holistic approach.
Yeah, absolutely.
And that may be more of a long-term thing. Let's even come back to the short-term telco thing. You've argued in one of your research papers and studies that the composition of telco spending for the average consumer compared to the other expenditures in the consumer basket is about 0.75.
That is what
I think we had the chart up here.
Yes.
So what you seem to be suggesting, if I'm reading in between the lines, is that if a tariff review were to take place, in a sense, demand is inelastic to a demand for telco services, inelastic to a tariff review. That's essentially what you're saying. So essentially what you're saying is you don't see any reason why this regulatory revision to tariffs should not take place because the impact will be almost negligible.
Yes, no, but the most important thing here is that what do the telcos want? The telcos want, one, allow us to adjust our price to at least to recover our costs. Marginal cost equals marginal revenue, right? But also deregulate the industry so that we don't have to come back every time
to ask for a tariff. So deregulate by debottlenecking
and all of that.
In a conducive
but also,
business environment.
What is the impact of an increase in tariff on the economy? Let's take it one after the other. An increase in the tariff, right, which is equivalent to improving the quality of service, means that price discovery on transactions, the settlement of all your payment systems, right, which is trillions of naira, the airline booking system, the control towers, the telemedicine, and all of that, all those things become more efficient. The efficiency of improved service, right, leads to an increase in labor productivity, factor productivity, which more than compensates you for whatever marginal increase in cost will be. When you look at it from that context, then you ask yourself, what if we don't do anything?
Right.
What's the value at risk here? If we don't do anything, I allow that sector to collapse. We don't even have to talk about it.
Yeah, the cost of even bailing out the sector, trying to shore it up.
No, because look at power. We had this structure which is not viable. And we are clapping that we want to go from 4,000 to 6,000 megawatts with 200 million people. It's not. That sector is going to remain underwater until something dramatic or something revolutionary happens in that sector. This sector has delivered returns, it has had new investment, but here are the numbers. The total revenue in this sector 5 years ago was about $6 billion. Today it's $3 billion. So it's lost 50% in dollar terms. If you do nothing and it drops to $1 billion, you will not be able to make any call. You'll not be able to send any text. You'll not be able to use your WhatsApp. And the economy will grind to a halt. Yeah. So the consequence of doing nothing or doing the wrong thing is much more.
And you make some valid points. My observations is that consumer reaction to calls for tariff reviews in mobile tariffs, tele tariffs, don't seem to be as politicized as, say, gas or electricity.
Yes.
So if there were to be a tariff review, I think there's a window of opportunity to do it, but perhaps doing it in such a way that it's not significant, so penal to consumers. Just a final really question around the sustainability of the telco companies and the future of the industry. Yeah. Do you see any major strategic events such as consolidation or change in the structure? I see some of the big players have been declaring losses, FX losses on some of their recent results. That's a really troubling and alarming picture. So what is the future of the sector as we round up now?
The future of this sector is that I think there'll be further consolidation. But consolidation in such a way that competition is not stifled.
Okay.
Right? And therefore, I think that because of the fierceness of competition, because of the intensity of rivalry, even though it's an oligopoly, you will still have a kind of price war. And if you say cumulatively in the last 11 years, inflation has been 376%, and yet prices have been static. You need to allow that happen. And if that happens, the fact that some people have come into this industry, like Nine Mobile and others, and did not survive, right? Means that there's a lot of
Nine Mobile still exists, so I should just mention that thing.
It exists, but it's limping along, right? I think there will be consolidation. I think that there will be, if this return of investment begins to improve, I think there will be new entrants from outside. Orange.
And perhaps bring in innovation, some of the technological trends we're seeing.
And that's what has happened in many markets. When you bring the big players in, coming with the deep pockets, innovation, efficiency, at the end, the consumer in Nigeria becomes the king. Because you know what it is in Europe, the contract, or there's a new phone, there's a new package. They're constantly going after you because they need that one. They need average revenue per user, they need subscriber market share, and they need to be able to invest in forward-looking technology. So I wouldn't bother too much about the repricing of the service, but I would look forward to the efficiencies that will come because of new investment and because of technological advancement and shifting of what we call the aggregate supply curve and the production possibility frontier. The Nigerian economy, because of its size and its strategic nature, will benefit substantially from this new technology revolution. But the flip side is that if you do nothing, it will also suffer significantly, and what Nigeria cannot afford today is a disorderly change.
Yeah, indeed. I mean, very well said. Great discussion here on the tariff situation in the telco industry. It'll be interesting to see what happens in the next few days or next few months. I suspect that this issue may go on for a while. And it seems like somehow we should hear the telco operators argue the strong business and economic case, as you very well put it here, but it will also be great to see how consumers react as it comes to light. I get the sense that the publicity around this has not yet climaxed. So thanks for...
I can assure you that if service quality continues to drop, if new results come out Q1, then Q2, and you begin to see negative trends, people will know that there is a crisis here.
Indeed. Thank you so much, Bismarck Rewane, a renowned economist and managing director of Financial Derivatives Company Limited, for that take on pressing the telco reset button.